Good day mga kayungal! Welcome back again. I'm RJ Primo and I'll be discussing now our new topic for financial markets and institution which is the chapter 3. What do interest rates mean and what is their role in valuation? So technically in economy, pinapa joke lang. Okay. So, closely watch yung magbabago ng interest rates because interest rates is one of the factor kung uutang ka ba or hindi, or mag-i-invest ka ba into bonds or hindi, anong bonds ang pag-i-investan mo or hindi. So, dito natin malalaman kung ano nga ba yung iba-iba natin na interest rates or even different bonds na pwede natin pag-investan or utangan. Okay? So, punta na tayo dito. Okay, so before anything else, ang pagme-measure ng interest rates ay base po dun sa cash flows doon sa iba't ibang panahon. So, ibig sabihin, yung panahon, after ba nang umutang ka ngayon, after 1 year, magkano na yung babayaran mo? Or magkano ba yung babayaran mo in the future at magkano yung makukuha mo ngayon? So, ganun po siya. So, interest rates and cash flows are interrelated. Okay? And of course, pagdating sa measuring interest rates, mahalaga na malaman mo ang present value o kasalukuyang value o halaga nung uutangin mo o babayaran mo in the future. Okay? So, first one is the simple loan. Paano nga ba yung simple loan? So, of course, ito po yung babayaran mo into a definite maturity date na merong kasamang interest. So, meaning babayaran mo siya kasama yung katawan at yung interest sa dulo ng maturity date. Okay, paano nga ba siya i-compute? Okay? So, dito, ang example natin ay uutang ka daw ng $100 na loan. Ito po. Tapos, babayaran mo at the end of 1 year ng $110. So, meaning, merong $10 or $10 na karagdagan sa inutang mong $100 loan. Okay? So, ngayon, the question is, in simple loan, magkano ang interest rate mo? So, it will be computed by interest rate is equal to $10, which is yung interest mo na babayaran mo or yung karagdagan na babayaran aside from interest all over the $100 na kung saan ito naman yung principal amount ng iyong inutang. So, kung i-divide mo siya, cancel out the symbol of dollars. So, 10 divided by 100 is equal to 0.10 or equivalent to 10% interest rate. Okay? So, if that's the case, we can compute kasi by $100 times 1 plus 0.10, which is 10%, is equal to $110, which is the future value of your loan today. Okay? So, if you lend out $110, at the end of the second year, you would have $121. Kasi yung 110, ita-times muli sa 1.10 is equal to $121. Okay? So, ibig sabihin, para lang i-times mo lang ng i-times sa 1.10 or 1 plus the interest rate kung ilang beses siya, ilang taon siyang uutangin. So, ganun po siya. Pero sa unang year kasi para siyang simple interest. Pag simple interest kasi, ang tinutubuan mo lang ay yung katawan. But just in case, ang example kasi natin dito, yung pinautang mo ng first year, kasama yung tinubo niya, pinautang mo ulit into second year. That's why even yung interest ay naisama, na ipautang uli, so 1.10 uli, 121. So even yung interest, tumubo siya. So kapag naman minsanan yan, na kinompute, ang tawag na po doon ay compounded interest. kung saan yung interest tinutubuan din aside sa principal. Okay? So, ganun po siya. Okay. So, therefore, pinapakita dito, pakita natin yung timeline. Kung makikita natin dito sa timeline, today, yung ating loan ay $100. Pag pinuutang mo siya sa loob ng 1 year, ang value niya po ay $110. Tapos yung $110, pinautang mo uli ng 1 year, magiging $121. At pag pinautang mo uli ng 1 year, yung $121 mo ay magiging $133 and so on. So, ibig sabihin, mas malaki talaga yung kinikita kapag mas matagal mong pinapautang. That's why there are lots of loans out there na pang long term. But make sure kapag nagpapautang ka, make sure na pautangin mo ay maganda ang financial position ng company na hindi biglang mababankrupt at dapat magaling ang management. Okay? That's why yung iba na financial institution na nagpapautang ay nagsi-CS muna. Ayun, yung chine-check muna kung credible ba o mataas ba ang credit index or credibility ng umuutang sa kanila. Okay, and of course may mga safety net sila like collaterals, like co-maker, yung kung sakaling hindi makabayad yung umutang, yung isa yung magbabayad, yung co-maker ang magbabayad. So, ingat-ingat kayo kung sakaling meron kayong mga beshiwa o kayong mga kumare, kumpare, tropa, tapos ginawa kayong co-maker, naku, pag hindi sila nakabayad, ikaw ang magbabayad nun. Okay, ingat-ingat tayo. Okay? So, paano nga ba yung pinaka-formula ng present value? So, yung present value po ay makukompute sa pamamagitan ng present value is equal to future amount or the cash flow in the future. Ito po all over quantity of 1 plus interest rate raised to the power of n. So, kung ilang taon ba siya? Okay? Or kung ilang term siya mauulit. So, kung inutang siya ng 3 years at ang interest mo ay annual, 10%. So, for example, 10% siya. So, interest mo dyan, 0.10 raised to 3 years. So, 3 raised to 3 po yung n. So, ilang term ba? So, n po ang denotion noon. Okay, so pinta tayo sa example. Simple present value. So, simple present value, ayan. Chinek ko lang kung nagre-record pa. Ayan. So, ayan. So, simple present value, what is the present value of $250 to be paid in 2 years if the interest rate is 15%? So, magkano daw po ba yung kasalukuyang value ng babayaran mong $250 in 2 years kung ito po ay merong interest rate na 15%. So, magkano nga ba ang value niya ngayon? So, in order for you to compute that, so your 250 is your cash flow in 2 years. Ito po yung value na babayaran mo in 2 years. Interest mo is 15%. Therefore, that is 0.15. Then, n, number of years is 2. So, i-substitute mo lang dun sa given natin kanina na formula. So, present value is equal to cash flow in 2 years, which is 250 all over 1 plus 0.15 raised to 2. So, ang lalabas po dyan pag kinumpute nyo sa calculator is $189.04. Okay? Ganon din po sa Philippine peso. So, substitution lang. As long as you know how to analyze the given data, so you'll be able to compute the present value. Okay? If you're going to think of this one, so, dun sa example, 250 babayaran mo after 2 years. After mo umutang ngayon. So, 250, ang value ng $250 po sa ngayon ay 189.04. Okay? So, meaning, kung ang present value is equal to face amount, o di ito lang po yung ibibigay sa iyo nung yung pinautang sa iyo, ano. Pero kung sakali man hindi pera yung pinautang sa iyo, halimbawa ay kotse, ganyan. Or kumbaga appliances, tapos usapan niyo ng kumari mo, sige, utang mo yan ng 2 years, tapos $250 lang. So meaning, magkano nga ba yung value nung utang mo ngayon? So $189.04 siya. So ganun din, di ba may mga nagte-term na pauraga doon sa baboy pag kinatay, tapos bayaran anihan. So magkano ba bayaran yung 1 kilo? Let's just say 400 per kilo ng baboy. So magkano yung present value niya kung kukumputan mo ng interest na 15%? Ganun siya. Parang ganun din yan, ano? So, alamin na natin ano nga ba yung 4 na uri ng credit market instruments. So, na pwede nating utangin o pwede nating pag-investan. Ano? So, first one is the simple loan, meaning ito yung pinaka-normal sa atin na kung saan pautangin mo yung isang tao. Tapos, after maturity date, pag dumating na yung maturity date, babayaran niya yung katawan, which is the principal, saka yung tinubo or the interest. So, ganun lang po yung simple loan. Ano po yung pangalawa? Fixed payment loan. Ano? So, tinatawag din daw po ito na fully amortized loan. Ano po itong tinatawag nito? In which the lender provides the borrower with an amount of funds which must be repaid by making the same payment every period. Ano? In short, ang layman's term dito, mga kapamilya sa pananampalataya ng Judas, ay yung hulugan. Ano? So, ibig sabihin, every month, may hulog ka na 4-5, let's just say 4-5, o di every month, tapos within 3 years, 4-5 yung hulog mo, parang sa motor. No? Sige, ang hulog mo, 4-5 kada buwan, within 3 years. So, 36 months yon. 3 years times 12 months, 36 months, yun yung hulugan mo. So, kung kukumputin mo, 4-5 times 36, di calculator tayo. Ano? Magkano? 4-5 times 36, 162,000 pesos yung babayaran mo para sa inuhulugan mong motor. So, let's just say, dyan po, nakapaloob na rin po dyan, yung katawan, yung principal, plus yung interest. Yun po yung fixed payment loan. Basta ang hulog mo within 36 months, within 3 years, 4-5, yun na yun. Nandun na yung katawan, nandun na rin yung interest. Okay? So, punta tayo sa coupon bond. So, dito naman, sa coupon bond, ang binabayaran mo dito, interest kada period. Tapos, sa dulo, magbabayad ka ng mismong katawan. Okay? So, parang, let's just say 3 years yung utang mo. Tapos, let's just say 200,000 yung utang mo. Tapos, every month, ang babayaran mo lang yung hulog mo para sa interest. So, bayad ka ng amount para sa interest mo. Tapos, sa dulo, babayaran mo yung pinakautang mo talaga. Ganon yung coupon bond. Ang alam lang natin coupon bond nung bata, coupon bond nga yung basa, di ba? Yung bond paper. Pero meron palang tinatawag na coupon bond, which is a type of a credit market instruments. Okay? So next po tayo is yung discount bond. So pag discount bond, it's just like a coupon bond. It's bought at a price below its face value. For example po ay babayaran mo, let's just say 100,000 after 5 years. Pero ang makukuha mo lang na pera ngayon sa inutang mong 500,000 na babayaran mo in 5 years, sa 5 years, after 5 years, ang babayaran mo ngayon ay ang matatanggap mo lang is, let's just say 400,000. Therefore, may nakapaloob doon na 100,000 interest. Ang proceeds mo lang kasi matatanggap ngayon is 400,000, pero ang babayaran mo ay 500,000 kabuuan. So, yun po yung discount bond. Ibig sabihin, parang binabawas na po agad yung interest na 100,000. So, medyo mautak yung company pag ganyan, pautangin kita 500,000. Pero ang makukuha mo lang sa akin, 400,000 kasi ma-minus ko na agad yung 100,000 na interest. So, ganyan. So, yun po yung discount bond. So, ito pong yield to maturity ay sobrang halaga po when it comes to credit instruments. So, syempre, meron siya iba't ibang computations. Sa simple loan po, mag-example na tayo agad since napaliwanag ko naman ako ano yung simple loan. So, example po dito, if Pete borrows $100 from his sister and next year she wants $110 back from him, what is the yield to maturity of this loan? So, tinatanong dito kung magkano ba yung interest rate. So, ang interest rate dito, for sure, na-compute ko na kanina sa interest na 10% nga. Kung 100 yung pinautang sa'yo ngayon, 110 yung singil sa'yo after a period of time, so 10% siya. So, natin present value natin gamitin natin yung formal na computation. Present value is equal to the future cash flow all over the quantity of 1 plus interest rate raised to the n. Substitute mo. So, what? Substitute mo. Yung present value mo na identify mo na 100. So, present value 100. Substitute mo 100. Then dito, 110 yung future cash flow mo. Remember yung mga given data, kung ano available mo, yun yung isa-substitute mo. So, ang wala dito ay yung interest rate. So, now, you'll be computing now using your knowledge in algebra. So, ngayon, nare-realize nyo, kailangan nyo yung algebra, So, ganun. So, $100 is equal to $110 all over quantity of 1 plus I. So, ililipat mo siya dito, papunta dito, yung 1 plus I, ita-times mo sa $100 is equal to $110. Then, in order for you to have a 1 plus I only here, gagawin mo is, i-divide mo ng 100 yung both sides. Natatandaan nyo ba yung kayo ay estudyante pa sa high school? So, 1 plus I ang matitira dito since mas ka-cancel out yung 100 kapag nilagyan mo ng $100 both sides. So, magkakaroon dito 1 plus I is equal to 110 all over 100. So, interest rate is equal to 1.10 kasi ang lilitaw dyan sa 110 divided by 100 is 1.10. Tapos, ililipat mo yung 1, positive 1 into different side. Therefore, magiging negative 1 siya. So, negative 1, ima-minus mo yan sa 1.1. The answer would be 0.10 and then 0.10 is equivalent to 10%. Okay? Pero kung simple interest lang siya, pinahirapan mo pa sarili mo, so balik ka dun sa una nating computation. Kung simple loan lang siya, interest is equal to 110 divided by 100 is equal to 1.1. Okay, we're back. Naputol tayo due to internet connection loss. So let me share the screen once again. Ojiba. Okay, so let us continue with the second type of credit instrument, fixed payment loan. So yung fixed payment loan po, ito po yung babayaran mo ng fixed every period. So, kung ang hulog mo ay 4-5 per month, edi 4-5 per month. Okay? So, paano nga ba nalalaman na magkano yung huhulugan mo every month. Let's just say every month or every year. Ano? So, paano nga ba? So, bigyan ko ng computation. Ano? So, ang gagamitin po natin dito is yung yearly payment, ano, which is the loan value amount. Ano, computing mo yan. Ito po kasi yung loan value amount is equal to annual interest rate ay is equal to ano to? Fixed payment all over 1 plus interest rate plus fixed payment on the second year all over quantity of 1 plus I raised to 2 at pangalawang taon, ganun-ganon, and so on. So let's just say here you decide to purchase a new home and need a $100,000 mortgage. Okay? So you take out a loan from the bank that has interest rate of 7%. What is the yearly payment to the bank to pay off the loan in 20 years? So magkano nga ba yung dapat mong hulugan? Okay? Kapag meron kayo financial calculator, makukompute nyo siya agad into 9,439.29. Pero kapag wala naman, edi ito ang gagawin natin. So, yung loan value mo kasi, yung kabuuan mong babayaran is 100,000 mortgage. No? So, ito na siya. Na-identify mo na. Is equal to fixed payment. Ito yung mga wala. Hindi pa ma-identify kasi ito yung tanong. So, tapos, i-compute mo, ano bang given? 7%. So, i-substitute mo dito sa I, yung 7%, and then compute mo lang. Ano? So, pasok mo lahat yan sa calculator. Ang lilitaw po dyan ay $9,439.29. Yun po yung babayaran mo every year dito sa example, which is payable into 20 years. Okay? Sa coupon band naman, punta tayo sa coupon band. So, sa coupon band, ano, ay ang merong formula dito is price of the coupon band is equal to the yearly coupon payment all over quantity of 1 plus I plus the yearly coupon payment on the second year all over quantity of 1 plus I raised to 2, which is the second year, and so on. Now, for example, find the price of the 10% coupon bond with a face value of $1,000, a 12.25% yield to maturity, and 8 years to maturity. So, yung years mo, nagugulan is 8. The face value of the bond is $1,000. The interest rate would be 12.25. Then the yearly coupon payments is 100. Okay? So, yun siya. Paano nga ba mag-compute? I-substitute mo lang itong mga to doon. So, ang lalabas dyan ay 889.20. Yun talaga yung pinaka-price ng iyong coupon bond. Okay? So, next po tayo. Okay? So, etong coupon bond, may pinapakita siya na ibig sabihin that when the coupon bond is priced at its face value, the yield to maturity equals the coupon rate. The price of a coupon bond and the yield to maturity are negatively related. This is, as the yield to maturity rises, the price of the bond falls. If the yield to maturity falls, the price of the bond rises. Of course, syempre, the yield to maturity is greater than the coupon rate when the bond price is below its face value. Okay? So, punta po tayo. What if yung huhulugan mo panghabang buhay? Ano nga ba yung mga panghabang buhay? Life insurance. Isa pong example ng panghabang buhay na binabayaran. For example, habang buhay mo na siyang babayaran, ang tawag doon, perpetuity or consol. So, ito po yung example, ano, makukompute mo po yung price of the perpetuity. Magkano nga ba talaga siya? Ano? So, price of the perpetuity is equal to yearly payment all over the yield to maturity of the perpetuity or the interest. Okay? Interest rate. So, therefore, the formula would be yield to maturity of the perpetuity is equal to the yearly payment all over the price of the perpetuity. So, kung ano man yung hanapin sa problem, so pwede nyo siyang gamitin dalawa. All you have to do is transpose the formula. Okay, what is the yield to maturity on a bond that has a price of $2,000 and pays $100 annually forever? Okay, so magkano nga ba yung interest kung ikaw po ay merong bond na kinuha na nagkakahalaga ng $2,000 at babayaran mo po ito ng $100 annually ng panghabang buhay. So every year nagbabayad ka $100 forever. So magkano nga ba makukompute kung forever siya? O di wow. Okay? So yield to maturity is equal to what? Yearly payment all over to price of the perpetuity. So all you have to do is to substitute C into $100 all over 2,000. You'll be able to compute the 0.05, which is 5%. Okay. So for now, that ends our discussion. For now, then we'll deal with another topic, which is the difference between interest rate, effective interest rate to the nominal interest rate. But now I would like to give you the fact that the current bond prices and interest rates are negatively related, meaning when interest rate So we're back, naputol lang tayo as we end our video. So again, I would like to give you a reiteration or the emphasis that the bond prices and interest rates are negatively related. When the interest rates rises, pag tumaas po yung interest rates, bababa po yung presyo ng bonds. At kung tumaas naman yung presyo ng bonds, meaning mas mababa po yung ini-imply niyang interest rates. So, ganun lang po siya. So, again, maraming salamat po. Our next topic would be the difference between the nominal and the effective interest rates. Okay? That's all for now. Lagi po natin tatandaan na para wala tayong pagsisiyan sa dulo ng buhay ay kung kaya mo pa, isagad mo. Bye-bye!